Hello and happy Wednesday evening. It is November 7th here Wednesday evening. I'm Anthony Delicandro with Well Real Estate. Thank you for joining me. Just wanted to give you a quick overview on the completion of our third quarter market report for the greater South Jersey region here tonight. So let me jump right in. I'm going to do a screen share here. I'm going to share a couple of different slides and a couple of different pages. And I'll share a link in the comments where you can actually find this report. But let me just jump right in. So here you can see the page, dwellsouthjersey.com. You'll see a link boldly on the page for how to find this report. But just to jump right in, again, third quarter 2018, we have number of sales that increased year over year for the third quarter here in 2018 by 3.5%, right? So total transactions, these are residential transactions, one family homes, which means single family and condominiums. We're excluding multifamily properties, we're excluding commercial, vacant land, etc. This is just the residential index. One family homes up 3.5%. Relatively modest growth year over year. It's been described in some circles as though we're in a little bit of a stall because we had a very sharp increase in number of transactions and even median home sale price over the course of the last couple of quarters, and now we're starting to taper. I kind of use the analogy with a colleague of mine on the West Coast that it's kind of like taking off in a jet, right? When the jet first takes off, its elevation gain is rather sharp for the first couple of years, and think of this as a recovery after a very sharp decline and recession that we've been in. We had a very sharp acceleration, and now we're kind of leveling, right? So that's kind of where we are. 3.5% more sales for the third quarter of 2018. As we move down in the median home sale price, again, going to be a quick overview. We saw a 3% appreciation for the third quarter 2018. So, good solid movement. When we move down into the bank-owned impact, we've been talking about this for a long time because bank-owned sales still remain a significant segment of our market here in South Jersey. We do notice that there was a very sharp appreciation in median home sale price of bank-owned sales, right? 82,000 last year, 112,000 this year. Median home sale price of non-distressed assets, non-distressed homes, actually saw, again, a modest appreciation, but it hasn't really seen that much of a change over the course of the last couple of years. It's just been very modest growth. A lot of the price appreciation has been happening in the default segment because we're seeing an enormous amount of investor volume in that segment, and that's causing competitive scenarios, increased prices being paid for some of these assets. So as we scroll down to the bottom of that, we've got a snapshot here of the actual, and let me just zoom in here. We're going to go over to the detailed look at the towns and communities here in Atlantic County. On this page, the next page of our report, we can actually see every single town in Atlantic County broken down, number of sales, what happened in terms of the increase or decrease in the number of sales within the community for the quarter, together with median home sale price. 2017 versus 2018, the percent change. We've got them for all the offshore communities, and then we've got them for all the onshore seashore communities. So take a look, see what that means to you. Then we also dive down. So the big question is, whenever we do these reports, is what does it really mean as we move forward for the future? And so I've got a link here that I want to just share really quickly on where our price is headed, right? And just as importantly, what does it mean to what we were looking at as we looked at prices and as we looked at a recovering market, right? What was that going to mean into years, 20, if we were in 2015, 2016, 17, 18, now that we're in 2018, what's going to happen in 19, 20, 21 moving forward? So we're taking a look at that, right? What we've done, and Bernie Cohen, who's a colleague of mine, and past president of the Atlantic City and County Board, I'm also past president of the Atlantic City and County Board, just returned from NAR's national conference, got a chance to see Lawrence Yun speak, who's the chief economist for NAR. And I was excited to hear some of these numbers. But when you look at what's interesting is moving forward, right? We had 3.5% appreciation for the third quarter 2018. As we look forward for what kind of appreciations, these are speculative increases from some of the larger and more respected economic institutions around the country. And interesting, as you look at 2019 and you look down at all of these institutions, mortgage bankers, Freddie Mac, Fannie Mae, the most conservative appreciation, interestingly, comes from the Realtor Organization, National Association of Realtors, predicting a 3.5% price appreciation for 2019. So interesting as we look forward. I want to share with you another chart that we also looked at over the course of, and let me just pull that up, here we go. So I think now you have this chart in front of us. Mortgage debt is well below household equity. So good friend of mine that works in finance shared this with me a couple of days ago when I posed a question to a few of my economic friends and colleagues on just, where were we headed? How do we see the signals that perhaps were overlooked in 2005, 6, 7, 8 as we move forward? And what are the differences between the rather sharp appreciations that we've seen in the last couple of years versus what the environment was like back in 2007, 8, and 9? And why this is important is because, this is the real story. We've seen 3.5%, or 3% rather, appreciation for the third quarter of 2018. But this comes after, this is our sixth consecutive, and let me just zoom back out, right? This is our sixth consecutive quarterly price appreciation, right? Sixth consecutive quarter of price appreciation. We saw price appreciation dating all the way back to the second quarter of 2018, where we also had 3% appreciation. In the third quarter of 2017, we saw 7.6% appreciation. Fourth quarter, 7.6%. In the first quarter of 2018, we saw 14% price appreciation. Go back and look at our report archives. We saw big jumps in overall price. Second quarter of this year, 2018, we saw 7% price appreciation. So over the course of the last 7 quarters, we saw a combined, net 29% overall growth in values and median home sale price for this region of South Jersey, Atlantic County. That is a staggering appreciation over the course of a short period of time, right? And so the concern was, as we saw these big gains, what is that going to mean as we move forward, and what's the difference, right? So here's, again, I stated a few minutes ago, we saw a sharp bounce. When we look back to the projections that we saw back in 2013, 14, 15 as to what we were going to realize, we knew that we were going to see a bounce, right? I describe it as a bounce in overall price appreciation as the market hit the bottom. And this is a national statistic. Our market actually hit the bottom a little bit later for other local reasons, right? We had a little more default in our system. We had a couple of casinos that closed. We had an unemployment percentage that was different, that was not congruent and growing at the same rate as the rest of the country. Now, all of a sudden, we've caught up, and we had our bounce that just occurred a little bit later, right? So we're seeing these big price gains. The significant difference between today and pre-recession is simply that we have not as much debt that's accumulated, right? We have traditional mortgage programs that borrowers are qualified borrowers are acquiring today to make these purchases. And the overall parallel that caused the problems that occurred back in 2005 and 6 just simply aren't happening now. People aren't mortgaging as high at levels, and more importantly, as we're starting to regain enormous amounts of household equity and overall wealth attributed to real estate ownership, people aren't doing the same thing they were doing back in 2006, 7, and 8, using their home as an ATM, etc. So we've got an overall healthy environment. I feel confident about what we've shared in terms of a expected appreciation as we move forward, right? This short video that's about 40 seconds just talks about why it's not a bubble and what we can expect in terms of supply and demand in 2019, and just overall expectations on the continued growth. So that's basically it for our third quarter report. Hopefully this is helpful. I am going to dive into absorption numbers in the next week that I'll also share. That also will help to just basically cement and bring a little more understanding to why we're going to be dealing with a continued healthy, growth, more long-term conservative growth numbers, 3.5%, 4% appreciation as we move into 2019. I'm excited about that. As always, we're excited to just bring you relevant information that can help you make the best real estate decisions possible for yourself and your family. Any questions, feel free to direct message. If you're watching this on Facebook, direct message it. Or you could leave a comment below asking for contact, or you could simply direct message our page. In addition, if you're receiving this video via email, just go ahead and reply. Again, we're excited to help and help be a part of your decisions as we move through the balance of 2018 and into 2019. Thank you so much for sharing your time. Have a super powerful evening. I look forward to talking to you soon. Thank you.